So iFAST Corporation just dropped some record-breaking quarterly results, with profits absolutely soaring. But is this just a flash in the pan, or is it the start of a massive plan to more than triple its size? Today, we're digging into the numbers and the strategy to see what it all means for investors. Let's get into it.
All right, so here's the plan. First, we'll look at the incredible results that have everyone talking. Then, we'll dive into their massive $100 billion vision for 2030. After that, we'll break down the roadmap they've laid out to get there. And finally, we'll wrap it all up with the key takeaways for you as an investor.
All right, let's kick things off with Section 1, the headline figures for the first quarter of 2026. And, to put it mildly, they were really, really good.
First up, let's talk about the bottom line. Net profit shot up by an incredible 47.5% compared to this time last year. Now, the company says this huge jump was powered by really strong growth from their Hong Kong digital pension business and their core wealth management platform. You know, their main service for buying and selling investments.
And that growth wasn't just in profits. The top-line revenue also jumped by a massive 44.5%. And this really matters, because it shows the whole business is expanding fast, not just cutting costs to look more profitable. The engine is definitely humming.
So, all this growth led to a brand new, all-time high for a really key metric, the total value of investments on their platform. It hit 32.6 billion Singapore dollars. And they pulled this off with over $1 billion in new client money, even when markets were, as they put it, pretty volatile. And just so we're all on the same page, assets under administration, or AUA, is pretty simple. It's the total market value of all the financial assets the company is holding for its clients. Basically, think of it as the total size of their customer ecosystem. It's a huge measure of their scale and how much trust people have in them.
Now, that strong quarter is great, but really it's just the launch pad for something way, way bigger. Let's move on and look at their long-term vision, because it's seriously ambitious.
And there it is, straight from the company's own reports. They are officially targeting an AUA of 100 billion Singapore dollars by 2030. To be clear, that's more than tripling where they are today. That is a huge goal.
Okay, and this chart really puts that huge goal into perspective, right? You can see the steady climb over the years to get them to that 32.6 billion mark. But to get to 100 billion by 2030, wow, that curve has to get a whole lot steeper, really fast.
To actually make that happen, iFAST needs to maintain what's called a compound annual growth rate, or CAGR, of at least 25.6%, and that's every single year for the next 5 years. Let me tell you, that is an incredibly high rate of growth to sustain. So the big question is, how on earth do they plan to do it?
So how are they going to pull off this massive growth? That brings us to our next section. Let's break down the strategy they've outlined to get to that $100 billion mark.
Their game plan starts with a major pivot. While that Hong Kong pension business gave them a massive boost, they're not counting on it for the future. Instead, they're pointing to their core wealth management platform and the iFAST Global Bank as the two primary engines for their long-term growth.
This whole shift is part of their updated 3-year plan, and it really rests on 3 key pillars. First, build a truly global business model. Second, keep developing innovative financial technology. And the third one, which could be a total game changer, is to fully embrace artificial intelligence.
And this global model idea is pretty smart. They're not trying to open offices in every single country. Instead, the plan is to leverage their big presence in top-tier financial centers, places like Singapore, Hong Kong, and London, to attract clients from all over the world. It's a really scalable and efficient way to operate.
And that AI pillar, this is where things get really interesting for investors. iFAST isn't just throwing around buzzwords, they have a concrete plan. They expect their total number of employees to peak soon in mid-2026 and then actually decrease by the end of 2028. Think about that. They plan to do this while the business is supposed to be tripling in size. If they can pull that off, it's a direct path to much, much higher profit margins.
Okay, so we've seen the record results and the super ambitious plan. So let's pull all this together and look at the key takeaways for any investor watching.
All right, if you're an investor who likes dividends, you'll want to pay attention to this. The company is boosting its payout. Based on their first quarter dividend, they're forecasting a total of at least 10.5 cents for the full financial year. As you can see, that's a minimum 25% jump from last year, which sends a pretty clear message about returning value to shareholders.
So, to sum it all up, the opportunity is clear. You've got this path to global scale, huge potential for efficiency from AI, and a focus on high-growth areas. On the flip side, the risks are just as clear. Actually, executing on these ambitious targets is a huge challenge, and of course, the company's growth is still tied to the ups and downs of the global financial markets.
Which leaves us with the central question, right? They've laid out the vision, they've laid out the strategy. But it all comes down to execution. Can iFAST navigate all the market risks to actually become that $100 billion global powerhouse they're aiming for?
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.